Digital finance has been a success over the last 7 or 8 years, and ever since M-Pesa launched in Kenya in 2008, it's been a very big focus of our industry's attention. And the World Bank just a few months ago released what's called the Findex, which is a global demand-side survey of people's access to financial services. There have been huge gains in access to financial services since the first Findex was done in 2011. There is, however, a persistent gender gap. So there is a 9% difference between access to accounts between men and women. But a number of countries are doing interesting work to solve that. So India is a really good case in point. 6 years ago, 35% of women in India had access to bank accounts. Now it's about 80%. And the gender gap is very narrow. So how have they done that? They've done that through providing accounts for people in state-owned banks and also microfinance institutions and other financial institutions. But also through intentionally targeting government-to-person payments and social payments in particular to women and to women's accounts directly. We've seen very similar work being taken up in places like Mongolia, in places like Iran actually, which have been very successful at reaching women with bank accounts. So I think there are lessons to be learned from China, from India, from Africa. Kenya is a leading light in financial access. And so how do we take those lessons and apply them in different contexts? Biggest challenges are still around access. Women are less likely to have a phone. They're less likely to have an account. In some parts of the world, it's very difficult for them to even go out to see an agent. So there are a whole bunch of just technology and business model aspects to women having access to accounts that are difficult, but we've seen big improvements. So I'm pretty optimistic that's going to change. I think other issues are harder to crack. So in some countries, there are actually legal barriers to women having accounts or running businesses, and those need to be addressed. And then there are cultural norms that, women are just not meant to be in control of the finances. That said, the country in the world that had the biggest reverse gender gap, in other words, where 9% more women had accounts than men, was the Philippines, and that's also about cultural norms. So women are more likely to move abroad and send money home, and they're likely to manage the finances. And so there are ways that those things can be resolved. I think in terms of reaching women with financial services, there is great value in being intentional about reaching women. So you have to find products that work for women, and women are better clients in a lot of cases for products, particularly for credit products. They're better payers. They're more responsible for paying funding back. So designing products that meet women's needs is a really important first step, but also having channels that work for women. So agents that are run by women are more accessible for women. Agents that are nearby the house are more accessible for women.